In this video I am going to show you one of the core ideas that market makers use to manipulate large masses of retail traders in the markets. When we talk about retail traders being maneuvered in the market, the immediate feeling that arises is that retail traders are apparently naive or uneducated. That's not exactly true, although there are certainly traders that fit under these two unfortunate categories. The way market makers are able to pull off such feats in the markets in large scales is because they attack two main cognitive biases that are inherent to all human beings, including the market makers themselves. If you have the Fractal Flow Strategy video course, you probably have a good grasp on the idea of cognitive biases and where they come from, but in simpler terms, cognitive biases are lenses through which we see the world. These cognitive lenses are automatic to all human beings and they precede our personality. All human beings walking the earth at this moment have a wide array of cognitive biases without any exception. These cognitive biases are so real and engraved in our minds as the fact that we feel hunger, for example. They are incredibly deep, and they are also the evolutionary solution to very old problems faced by our ancestors. The core of the maneuvers played by market makers dwell at the heart of two distinct cognitive biases. When these two cognitive biases are combined in the context of the financial market, a very cynical and dangerous reality opens up. The first cognitive bias is called the von Restorff effect. The second cognitive bias is called reverse psychology. The von Restorff effect is quite interesting. When people are subjected to similar forms of stimuli, like in the price charts for example, they tend to automatically pay attention to the piece of information that stands out the most. This is a reflection of our pattern-seeking nature that one way or another made us plow through thousands of years of evolution quite successfully. Let me give you a practical demonstration of that so you can truly understand what it means. Observe the following series of circles and take note of what your brain does when you see something different. When the larger circle appeared on the screen, your attention immediately gravitates toward it, and your brain immediately starts to form patterns about what that means, and what the other circles in the series will be like. This is quite subtle, but even after the circles go back to the normal size, your brain cannot help to gravitate to the piece of information that stands out the most. This is the von Restorff effect in practice. Market makers do that all the time in a price chart, but as you might expect, the way they do that in the market is not so obvious as the example we just saw. You can see the von Restorff effect in action in the last video I uploaded to this channel where I explain a very subtle flow shift in the market. Basically, market makers will tilt the market in specific points to draw attention to certain key areas of price. This will automatically form a bias in all retail traders. For example, while everybody waits for the obvious short trade opportunity, market makers silently create market structures that enable the market to go long and vice versa. This idea brings me to the second cognitive bias which market makers take advantage of, which is the reverse psychology paradigm. In the light of the financial markets, the reverse psychology functions when market makers induce traders to think the market is going in one direction, which is the opposite direction that market makers want the market to go. This by itself creates the opportunity of deception in certain key areas of the market due to the way most traders deal with their stop-loss order. Once this deception occurs, market makers can then take advantage of the liquidity generated by huge amounts of stop orders being triggered and drive the market in the direction they intended in the first place. This is of course quite subtle, and it functions as a layer to the von Restorff effect. No wonder 99% of traders end up losing money. If you're not careful about this sort of stuff, you will be manipulated, as we all have been at some point of our trading careers. Some of you might be wondering how you can avoid being manipulated by the market makers with the fractal flow strategy, since the strategy does not deal with these subtle manipulations in depth. The fractal flow strategy is one of the ways in which you will avoid these manipulations by understanding the correct places to put your stop-loss orders. The primary weapon of market makers in objective terms is your idea of where your stop-loss orders should be. If you understand where to put your stop-loss orders correctly, like in the fractal flow method, you will avoid being manipulated by the large traders. At the same time, you will not need to be aware of how they operate exactly. In other words, the fractal flow strategy is a simpler strategy that gives you this extra layer of protection against the market makers. Weirdly enough, many of the trades that can be done with contextual trading and the fractal candle are similar to the trades you can do with the view of the market makers. I felt the need to clarify that because a few students of the fractal flow method asked me about the relationship between the fractal flow method and the presence of market makers. You can trade the fractal flow method without being aware of the market maker maneuvers and how they work. The advantage of knowing such maneuvers is that you are going to be able to make more advanced trades, and sometimes you can decide to stay longer in a trend because of the awareness of how market makers employ their exit strategies. These trades are the absolute pinnacle of the technical analysis world. I hope you found this video useful in some way, or at least enough to sparkle your curiosity about the amazing world of the financial markets. If you want to support the channel, don't forget to subscribe, leave your feedback below and check out our other videos in the channel. There are tons of free material already. If you want to take your trading to the next level with a pro strategy, check out the Fractal Flow Strategy video course in the Strategy Store. That's it for this video. Once again, thank you very much for all the support and thank you for watching.